What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is May 11th of 2022. Well, folks, I hope you're having a better day wherever you are. I hope you're hanging in there since yesterday. Luckily, cryptocurrency markets have started to go a bit more sideways over the last 24 hours. We've seen Bitcoin continuing to try to find support at that critical $30,000 range, retesting it 2 times here in the past couple of hours. And on top of that, I not only want to dive into what my thoughts are on Bitcoin's price and where it's heading, but outside of that as well, talk about 2 major macro factors, and that is the continued depegging of UST from its dollar peg, and outside of that as well, talking a bit about the NASDAQ and the ratio between Bitcoin and the NASDAQ. I know we've talked about these topics before, but we got to continue to focus on these, as these are the highlights that are really showcasing us where the market might really go. Let's continue to dive into it, guys. If you enjoyed the video, consider dropping a like. Let's go ahead and kick things off. Now, to start off here, again, I want to emphasize the significance of price. All the while, we've got some good buy-side volume here coming around this 30K range here. I still want to emphasize here what matters most is the price action here when we're analyzing Bitcoin. And so far, all the while, we've got a higher range of lows, which is good comparative to the kind of capitulative lows that we saw back on May 9th. It is important to note here that so far we have not seen a pattern of higher highs in price. We're not seeing the kind of rebound we would have wanted to see yesterday. As you guys can see here on the daily chart, what we were hoping for yesterday was what's generally known as an engulfing candle. After a capitulative candle, something where you're seeing really hard sell side pressure here, sometimes double digits in the case of an asset like Bitcoin, what you really want to find is that during these capitulative lows, when people are getting liquidated, when the market's dragging down to that historic support range, you really want to see buyers come in masse, making up for all those losses within a matter of a day or 2. That's generally what's known as an engulfing candle. Usually people set that standard where it has to happen in a day. If it happens in 2 days as well, that's a telltale sign that you're likely setting a bottom, that really the dramatic final sell-off of a correction is now being basically in a sense reversed, that buyers are coming in, they find that that's a good discount range to fill in some large orders. Huge changing of the guard in this case between the original holders and the new holders coming in and buying at that discount. Now, we aren't seeing that here. And again, I'm going to be honest with you guys, that's not a good sign to see. We should be seeing confidence come into price. But as we talked about yesterday, one of the big things that could continue to weigh down Bitcoin's price and keep us in this contested territory around 30,000, making the trend uncertain, would be the continued depegging of UST, the stable coin of Luna, in this case, one of the biggest protocols in the crypto space. Now, as you all know here, we've been talking about that quite a decent amount. We talked about it a good amount yesterday. And so far, the Luna token is continuing to drop down. Why is it dropping? It's dropping due to the fact that the peg has gotten even worse. After coming back up towards around the 90, 95 cent range yesterday, we started to roll over again, revisit close to the lows, roll over again, another dead cat bounce, and come down all the way to 24 cents. A massive decline here for the pair here. Now, all the while, it's starting to rebound here a little bit. There's a lot of people playing kind of a little bit of Russian roulette, or gambling a bit, if you will, playing their odds, you know, with the simple fact that maybe, perhaps there's a chance that Terra could come back from this. Perhaps there is some rescue package that's going to bring it back up. But I got to be honest with you all. I can say that throughout the history of the crypto space, there have been a lot of algorithmic stablecoins. There have been all types of different iterations and proposals on how to build some kind of asset of stability on chain. The only one that I think that has done this successfully is either stablecoins that are backed one-to-one with real assets and have really deep liquidity and trust and reputation, such as USDC, and decentralized stablecoins like DAI that actually have more ETH backing the stablecoin itself than, in this case, the actual creation. Whereas in this case with Luna, you're basically burning effectively $1 of some altcoin on the market in order to generate a stablecoin that's supposed to somehow always hold a dollar value, and through a variety of means and mechanisms trying to maintain and keep that peg. Well, obviously those means and mechanisms have either broken or were never really as sound in the first place, and that is why we've been able to have this breakdown here. And again, it's important to note here that when this peg is broken, it is a bearish thing for crypto. It's bad for crypto. And the reason why is because the Luna Foundation, which have been buying Bitcoin in this case to act as kind of as part of the Luna Foundational Guard, that's what it is, LFG, they've been buying Bitcoin in order to prepare for something like this when there would be a dip in price. So what they do is they use that Bitcoin they purchase in order to aid market makers in supplementing that peg to come back up in price. And again, all the while they've had a lot to throw at it, it seems like the sellers are taking advantage of that. And at this point, all trust is lost. The vast majority of trust is lost in Luna. Now again, if you're out there and you're thinking, hey, I want to buy a little bit just in case it rebounds, hey, by all means, guys, that's fine if you want to, but I gotta be honest with you all. Again, this is a big reason why on my channel I haven't been talking about Luna for a long time. There really hadn't been a good amount of battle testing yet for Luna's stablecoin UST. And this is it in full swing, in full action here. I'll be honest, I didn't think it would get this bad, but I have to say, I mean, if you really take a look here at the daily chart, we're looking at the log chart here, but really just take a look at the standard one. I mean, you generally don't see projects that have these kind of declines come back. I'm just being honest with you guys. I don't want you to put already any of your portfolio in this case, or any significant amount of your portfolio that might already be down, into something like Luna in this case that also might go down to zero. Big misunderstanding people have is they say, oh, something's down 90%, right? That's great, I should go ahead and buy it. But lo and behold, something you buy that's down 90% can also decline another 90%. It can continue to go all the way down to zero. So just bear that in mind here. Know that any money you're tossing into it, it's probably lost money. Just one thing to think about. I know some people are taking that swing opportunity just in case it comes back, but I'm not going to say you shouldn't do that. But to be honest with you all, it's down from $120 down to $5.60. I think any of the VC backing, I think any of the institutional positions that were built in Luna, any of the backers are probably now running for the hills if they haven't already, and yeah, really aren't going to be long the project long term. And if anything, are going to look for an exit to get out of their positions, which are probably quite hefty. So you're going to really need a miracle for this to kind of reverse course. Now, one big thing though I know that a lot of people have been damaged by as well is like the Anchor protocol and all these platforms. And guys, one thing I understand if you were caught up in it, it's completely fine. It's understandable. There are things like this, again, people who chase yields. We talk about it a lot here on the channel that chasing yields in DeFi outside of the more stable ones is really a crazy gambit, because you're betting on all kinds of different perceived value in the market and estimations. And to be honest, it's much, much better that if you are going to chase yield for your crypto assets, that you guys do it in a smart way. Do it in one where, in this case, there is an actual stable market, there's reputable players in this case, and on top of that as well, it's not based on some new monetary experiment like Luna and UST. Just going to be completely honest, that's the biggest problem here, is that a lot of people got choked up in this. So I want to say that I wish you guys all the best on that. But if you are going to chase yield in this case, I would recommend doing it through a partner in this case that you can trust. One of the platforms that I've used all the while, many other people out there in the crypto YouTube space have just been beating a dead horse saying that Anchor and all these kind of crazy DeFi protocols are the place to get yield. We've been continuously promoting Celsius here on the channel since 2018, which has been a steady provider of yield on both stablecoins, but outside of that as well on a variety of cryptocurrencies. You can currently earn up to 7.1% on a whole range of stablecoins and cryptocurrencies pegged to various fiat currencies. And on top of that as well, you can deposit a wide range of different cryptocurrencies and get yield on them, passively, idly earning yield on your crypto assets without having to do any additional work. And that's the way to go for yield here in the market. So if you guys are interested, you can check out the link down below in the description. I always recommend going for these more moderate yields rather than some protocol out there that's promising 50, 100% returns or whatever it may be, and focus on one instead that's rooted in a trusted framework. Celsius has been around the block since 2018. We've used them ourselves here on the channel. I love Celsius as a platform, so definitely consider setting up an account at the link down below in the description. Now, outside of this as well, I want to spend some time to talk about the market order flow and talk about our key charts here, because all the while what's going on with UST is very important. We need to watch what's happening in the equity markets. So first off, let's take a look at these charts here. So the NASDAQ 100 futures market here over the past couple of hours, continuing to rebound on some of the faded gains that we had here towards late last night. And as we started to see here, we're coming back up here back up pressing towards the rebound we saw in the futures market on the 10th. So what we really need to see here is not only that the futures remain strong, but when the market finally opens here in the next few hours, we need to see a killer rebound. We need to see a 3-4% move upwards. We need to see people buying the dip at this range. Why is that? It has to do with the support range that we are testing right now. It's this range right here. I'll go ahead and just kind of section it off for you guys. Between here at 12,200 and here at 12,500. This $300 spread here is where we need to see the NASDAQ hold. If we cannot make this range new support like we did over here back in March 2021, the NASDAQ is in for a rude awakening. Tech stocks are going to take a pretty big, brutal hit, and seeing how the BTC to NASDAQ ratio is now starting to act, that would spell bad news for crypto. Okay, I'm just being realistic here, guys. As much as I think the 30K range looks like it's holding quite well, it's something to consider here. So let's just bear that in mind here when we're watching the market. Now again, taking a look at the ratio here, BTC NASDAQ ratio doesn't look too good, right? If we're taking a look at the chart here, we've got a lower highs, higher lows, except for right here, we are retesting a similar low here rather than setting in a higher low. We broke down here over the past few days with the recent correction in Bitcoin's price. And to be honest with you all, again, as much as we've talked about this being a bullish sign here, the rule has now changed in this case. We have not maintained the higher low there. So this is something to worry about here unless we see a swift recovery in the NASDAQ that will drag Bitcoin up along with it, where Bitcoin, all the while it's outpacing equities to the downside right now. If it would reverse, if equities go up 3 or 4%, Bitcoin therefore maybe charters up 8-10%, that's when this ratio might still be legitimate in this case. We might be able to save face here. But right now, if we're following true technical analysis here, we have broken below that line here. And it even looks like we've seen a slight rejection here where the ratio might start to decline. So that is something to be cautious of. There's not a lot of good signs here. This is not the kind of rebound we wanted to see here at 30K, to be completely honest with you all. Now, the one thing I will say though, that I do like and I need to see is maintained, is the reversal on the cumulative volume delta here, the amount of market buy side pressure here that's been driving up price. Because to be honest with you all the while the order book still, as we can see from the heat map, is much thicker than the asks on the order book. During a capitulative sell-off, that's pretty common. That's pretty common. You're going to have more bids than asks on the order book because most people are market selling into fear. And on top of that as well, afterwards, you've kind of flushed out anyone who really wants to get out of the market, so there just isn't going to be as many asks on the order book. What we need to see here, though, is that the bulls continue to charter forward here because the momentum, although it was very strong here the other day, we've reversed a lot of the capitulation here in the market with positive buy side pressure. That, in this case, has been mainly absorbed into asks on the order book. And we're not seeing enough market continuation here for market buy pressure for us to get back above this range, at least as of yet. So we need to keep an eye on that on Bookmap here. If you guys haven't already, definitely consider using Bookmap. I think it's one of the really great tools out there you can use, whether you're more of a short-term trader tracking the market, or in this case, more of a long-term investor trying to find out which price points might be good to DCA into the market. There's a free version you guys can definitely use, and if you want to get access to multi-book, which is what we're using here, you guys can definitely sign up for one of the paid plans at the link down below. It's a great way to support the channel, and I absolutely love keeping an eye here on the wide range of bids and asks on the order book, seeing where the market order flow is generally going across the board. It's really interesting to see the dynamic here changing. And a lot of those asks or these bids on the order book here from buyers who wanted to buy in a lower range getting filled here. It's very, very interesting to see. Now, the last thing that I want to bring to your guys' attention here, to kind of close off the video again, my biggest telltale sign that there's still a glimmer of hope in this case that 30K could hold. That something might pull through, even though we've got Terra doing terrible, even though we're kind of on edge, waiting to see what the equity market's going to do. The biggest sign that I'm really interested in is what's going on at the ETH to BTC ratio. Take a look at how ETH to BTC has performed over the past few days. Take a look at the 4-hour chart here. This was back at the capitulative lows here on May 9th. We've seen a pretty stark increase here, 5% Ethereum against Bitcoin into fearful selling in the market. We're pressing back up towards the same range we were at here on April 3rd or April 10th. What does that tell us here? about the market right now. That all the while during this fear, people are converting their Bitcoin, or at least in this case, are not selling Ethereum as harshly as they are Bitcoin. Ethereum should be seen as more of a speculative play. It's a smaller cap cryptocurrency. Second, albeit, it's still smaller. And in a risk-off market, usually you'd be seeing things like the ETH-BTC ratio declining. So I think we need to keep an eye on this one here. Right? I think it's really interesting. It's telling that we're seeing these major moves here in the ETH-BTC ratio, and we're not seeing a revisit to the support line. In fact, this looks like it's got the momentum to really start breaking out higher back up towards the short-term resistance band that we hit back in May as well as December of 2021. And into a rebound in the market, Ethereum could really start to crush it. So it's just something I want to bring to your attention. The important things here really, guys, are understanding that UST is probably done for. It is going to be in a death spiral from this point on, most likely. It is a pure speculative bet to hold UST or to hold Luna at this point to make a return. And most importantly, we really need to see how these futures are going to go in the equity markets. It's the biggest thing we could watch for. If we see a killer rebound in the NASDAQ and fears of the Fed's actions of higher interest rates and supposed quantitative tightening that it's going to begin in the future, then we can see crypto rebound with it. I think that's what we have to see now. Again, the correlation has been holding strong, and it's coming up towards a very important point where it's going to be make or break for crypto here at 30,000. Not to say that it couldn't come back in the future, of course, not being that pessimistic, but this is definitely a period of time where we have to be a bit on the edge of our seats to see what price is going to do. I can tell you guys, though, I haven't been doing anything dramatic. I'm sitting here, I'm watching the market, just trying to see it all play out and stuff. Again, we've been through these kind of things before. And I promise you all that all the while it might seem scary, it might seem crazy right now, the best thing you can do is not anything crazy or irrational. Just sit there, observe the market, try to kind of learn from this experience. That's the biggest thing I can emphasize here. The first few corrections that I went through throughout various forms of investing, I went through major sell-offs in equity markets, went through sell-offs and major swings in forex markets, and even in crypto many times, more than any other market. And it can be difficult, but you just got to learn in this case to realize that a lot of the exaggerated portion of any sell-off will be rebounded and replenished within a matter of days, if not weeks. It's just a matter of being patient. Don't get caught 2 steps behind. Big point here. Anyways, guys, that's it for today's video. Thank you all so much for watching, and I hope if you all enjoyed this video, you can consider dropping a like. But until the next one, I'll see you all in the next video. Take care, everyone.